Welcome everyone to FX Street. My name is Adam Rosen. Very happy that you could join us. Today we're going to talk about a little bit of a different direction. In particular, talking about the actual mechanics of trading an account. I think so often we talk about the fundamental forces behind why the Forex market moves. And we talk about the specific technical techniques that we use to find the trade. You know, we use the RSI, the moving averages, and the MACD. But I think rarely do we spend some time trying to put it all together. So when we open up the charts, it's not just, I don't think trading should be a matter of just, simply looking for the RSI to cross above and below, and then if this happens, well, I guess I think it's a good idea, and I don't know, let me look at the charts. And I don't think there should be any kind of guesswork. I think that trading should be as a prepared and as rehearsed activity as possible. And I like to trade, to equate trading to running any other kind of business. If we ran any other kind of business, Microsoft, Google, Apple, there's no guesswork. When Apple creates a new iPhone, I always love to talk about Apple because they're such a success. When Apple creates a new iPhone, they spend millions, tens of millions of dollars in research. What kind of iPhone should we make? What should it look like? What should it feel like? How much should it weigh? What features should it have? And when they actually execute it, meaning offer the phone to the public and, the store layout, everything is planned. I think trading should be the same way. There should be no guesswork. Non-farm payrolls comes in worse than expected. The CPI comes in better than expected. We should immediately, within a second, know exactly what we're going to do under any circumstances, good, bad, or otherwise. So what we're going to talk about today is putting together a little bit more of a concrete plan to allow us to prepare for any market situation. How often does it happen that, we take a look at, for example, we look at the euro-dollar. Euro-dollar, like many euro crosses, has been going down a lot lately over the past few months. How many of us wish that we sold short the euro-dollar at 125, 130, 135, 140, 145, all the way up? Why is it now that most traders are finally realizing the euro-dollar is going down a lot? Why could we not have identified this trend earlier on, and why could we not have been able to look for the sell short position here and all along the downtrending resistance? What we're going to do today is we're going to try to talk about a very simple method we can use so we can take advantage of those times that the euro-dollar goes up, having a very good idea that it's probably going to go down. And on the same note, when the euro-dollar hit these very significant lows, I was short the euro-dollar, but why did I not close at least some part of my trade? Why did I not take profits? Why did I not be able to take advantage? I think that's the key. I think a good trader with a concrete trading plan will have a plan that will allow him to take advantage, him or her, of course, will allow that trader to take advantage of whatever the market gives us. If the market goes up a lot, we can sell short. If the market goes down a lot, we can buy. Okay. So, and I'll try to chat this in to keep track of my thoughts here. I think step number one with anything is to identify the trends. Okay? Now, we can identify the trend 1.1 by the use of technical analysis. 1.2, fundamental analysis. Now, technical analysis is obviously our interpretation of the price charts. Fundamental analysis is our interpretation of the news. The trend is your friend. We always want to try to identify when there's a strong trend in the market and then trade only in the same direction as that trend. Now, technical analysis, and we talk a lot about this during our other webinars, is very, very simple. Basically, we're taking a look at a chart and let's erase all the lines and show you exactly how simple it can be. I like to start with a daily chart. The daily chart should go back anywhere from 6 months to a year. There's no right or wrong answer, but we're trying to really capture what the chart's telling us. In a downtrending market, I think resistance is most important. Resistance is that higher downtrending line, and then we should try to look for a support line I have found that when support and resistance come in a parallel fashion, that's a nice source of confirmation. So I try to look for a parallel line. Now, here we find euro dollar. It's not perfect, but it's basically there. A parallel line down to resistance euro dollar. Now, obviously, we want to trade in the same direction as the long-term trend, which means in the case of the euro dollar, I'm only looking for a situation to sell shorts. Where am I going to sell shorts? I'm going to try to sell short as close as possible to resistance, which is over here, just below resistance. Now, again, there's no exact science to how I'm drawing these lines, just visually trying to show you what I'm looking for. Protective stops we place at a point in the chart we sincerely, realistically expect the market will not go to. So the resistance is a downtrending white line at the top. The blue line represents our entry, where ideally I'd like to sell shorts. And the red line represents our protective stops, where we believe the market will not go to. Furthermore, we can look to take profits at the lower end of the range, which will make this line green. This is our take profit level. Now, that's in a perfect world. Rarely do things happen in a perfect world, but that's essentially the type of trading philosophy that I like to use. And from a technical point of view, notice there's really no trading activity that's taking place in the middle. Now, this is an example, an extreme example, which, doesn't really exist. Between you and me, the fact of the matter is I will place trades in the middle of this range. But it's definitely going to be with this mindset where I'm going to try to sell short as close as possible to the upper end of its the swing highs, as they're called. And taking profits, I'm going to try to take profits as close as possible to the swing lows. But this is the basic approach. Technical analysis, identify the trend, always try to trade in the same direction as the long-term trend. Fundamental analysis, and let's talk a little bit more about this if we have some time today. Fundamental analysis is where we try to identify the trend, but instead of using the charts, we look at the news. Now, through this approach that we're talking about today, which I'm going to talk about in just a moment, I'm not placing trades all day. There are sometimes many days that go by that I don't place a trade. I actually missed a trade last night, but other than that, I think that was the first trade. Last night was the first trade, according to the system, this week. I usually place 2 or 3 trades a week, maybe a little more, a little bit less, depending on, obviously, the market activity. But the fundamental analysis is what I spend the rest of my time doing. When we're not placing trades, and there's just so many ways you can draw a technical analysis. I mean, look, in less than 60 seconds, we basically summed up the euro-dollar daily charts. Now, of course, we can go to a 4-hour chart and look at a little bit more detail. Technical analysis should not take you very long. You draw the lines, and how often does this chart really change? It hasn't. Fundamental analysis is where I really spend the majority of my time. If the euro-dollar is going down, from a technical basis, we know that the euro-dollar is going down because the chart's going down. But from a fundamental basis, we should be able to look at the news and to say, you know what? The fundamentals in the Eurozone are much worse than they are in the U.S. And I've been tracking the economic numbers, and actually, instead of me hypothetically telling you, I can show you with a real example. Okay, so I'm going to turn the charts back on in a moment. Let's go to, what's today, July 10th. So let's go back about 2 weeks. Today is Tuesday. So we'll go back to the 25th of, that was actually a Monday, it doesn't matter. 25th, and we'll take a look all the way through July, the end of July, okay? Now, I'll show you in a moment what we're looking at here. I'm using the FX Street calendar. And I'm basically going to look for only the numbers that directly affect the euro and the dollar. Sorry. That's the FX Street calendar, by the way. And the reason why I like this calendar in particular is you can isolate which currencies you want to watch. Now, from a fundamental analysis, from a fundamental point of view, fundamental analysis, there's a lot of news. I like to look at three big pieces of news. Obviously, the question we should always be asking ourselves is, what will the central bank do? Is the European Central Bank more or less likely to reduce or raise interest rates in the near-term future? Same thing with the Federal Reserve. And there's actually, when you get into it, there's actually more than that, because now, for a long time we don't expect the Federal Reserve to raise interest rates, but the question is, will they initiate another round of quantitative easing, or is a second round of operations was going to be enough? But it's basically monetary policy. What is the most likely future direction of monetary policy? Higher or lower interest rates, more or less stimulus. Okay. So, but aside from that, there's three big economic numbers that we like to look for. Number one is growth. And we can say growth is GDP, gross domestic product. Shows how much the country is, how well the country is performing, so to speak. How much, all the goods and services put together. How much is that country producing on a monthly basis? And we have employment numbers, and that includes obviously the non-farm payroll number, then the monthly unemployment level, and we could also look at the ADP numbers and the weekly initial job claims. Most important, though, is the unemployment rates and non-farm payroll in the U.S., of course. And then the third one is inflation, which is CPI, Consumer Price Index, PPI, Producer Price Index, and in the U.S. we use something else called a PCE, Personal Consumption Expenditure. It's basically the CPI, but it allows for substitution in the basket of goods and services that it measures. It's really not that important. It's measured the same. We look at it the same way. If the economy is improving, we look for inflation to go up. If the economy is going down, we look for inflation to go down. Okay. Now, and I see these questions. I'm not ignoring them. But we look to those numbers for confirmation that the European Central Bank and the Federal Reserve, let's refresh the charts here, is more or less likely to raise or lower interest rates. Now, let's go back. Let's look at the FX3 calendar, and we're going to look at only those three big numbers in the Eurozone and in the U.S. The first big one took place, that's Consumer Price Index in the Eurozone. And the Eurozone, we could also talk about, that's actually Germany. Did I take away Germany? I thought I did. We did, but these are big numbers. Okay, so we want to look at the three big numbers, and there's actually a lot more to it. We'll include the German numbers as well, because Germany is a very influential economy in the Eurozone. So let's try to keep track of all this. We'll call this German numbers the EU. EU is CPI. We'll call this a disappointment. Disappointment. Okay. That was early in the month of June. Moving forward, and again, where there's durable goods and there's a lot of other stuff we're looking for, but we're going to ignore all that stuff. The personal consumption expenditure in the U.S. and the GDP that was expected at 2.2 was actually 1.9. But then again, the personal consumption expenditure, it looks like that was actually a little bit of an improvement. Better than expected. Better, we'll type better or worse, just to keep things easy, okay? Okay, so now we look down and we see the core personal consumption expenditure. Okay, well, we talked about that already. We look at the producer price index in the EU. So Euro PPI, worse than expected. I'll just type in the word worse. And I promise I have a point to all this. Euro PPI worse than expected. Scrolling on down. Unemployment rate in the U.S. You will see unemployment as expected. Then we continue on down. We see the next big number, EU CPI. Oh, that's next actually. That's German CPI. That's later on tomorrow, I think, early tomorrow morning. Okay. But we can see, taking a look at the end of June through what we know right now, we had bad CPI numbers in the Eurozone, better than expected. I didn't type it in. That's actually the PCE, the core PCE inflation numbers last month were better than expected. They were actually disappointed after the fact. The Eurozone PPI was worse than expected. There's a lot more numbers that we're not talking about. And the numbers in the U.S. have not been good. I'm actually very bearish on the U.S. as well. I guess maybe the U.S. isn't the best example. But pound for pound, the fundamentals in the Eurozone are much higher. You compare 8.2% unemployment in the U.S. compared to 11.1% unemployment in the Eurozone. You compare 1.9% GDP in the U.S. to the GDP in the Eurozone, which I think is actually worse, and in some cases negative. And you take a look at also the inflation numbers in the U.S., they're steady. They're bad and they're steady bad. In the Eurozone, they're very close, if not already negative. Point being is that when you compare the Euro fundamentals to the U.S. fundamentals, the Euro fundamentals are much worse. Every time, and it's very easy to start with the three big numbers: growth, which is GDP, unemployment, and inflation, CPI, PPI, or PCE. Take a look at those three numbers across the 8 different currencies. So 8 times 3 is 24. Throw in another 8 central bank meetings, and you have a little bit more than 30 economic numbers to watch on a monthly basis, meaning one number a day. I keep track of all these numbers in an Excel spreadsheet, or you can just write them down on a piece of paper. It becomes, and it's not because there's going to be a quiz, after the fact, but it's very, very helpful for myself, that I found it to be very, very helpful to write down the big numbers that occur every day, just these 3 big numbers to start with, because it helps you create a narrative. It helps you, it tells a story. Every single day, it's like a soap opera. We get a little bit more information as far as the soap opera. And all of a sudden, day after day after day, if the numbers are bad and bad and bad, subconsciously, you begin to develop a very negative opinion about the Eurozone. Now, I'll make things a little bit easier. Whoops. Because we want to make things easier. So I'll give everyone this link, which is an article that we recently published on FX Streets. This is our weekly review. We haven't been doing this very long, but we try to summarize the big events that occur over the course of the week. This is last week. So let's summarize in less than 60 seconds the big numbers that occurred last week. Eurozone unemployment, new record highs, 11.1%. As we go through these numbers in the next 60 seconds, it'll be more than 60 seconds. But in the next minute, as we go through these numbers, see if, follow along and see if you begin to detect a little bit of a trend. Eurozone unemployment, new record highs, 11.1%. Reserve Bank of Australia kept rates unchanged, but they kept rates unchanged because they saw some of their economic numbers are starting to improve, and they're recently they've reduced interest rates, Reserve Bank of Australia did, and those lower rates are actually working to stimulate the economy. So that was good news in Australia last week. Go back to the Eurozone, producer price index, that's inflation. It increased at a rate of only 2.3%, following the previous month's 2.6%. Not good. Bank of England introduced another £50 billion of quantitative easing because they see that the economy really needs it. European Central Bank reduced interest rates below 1% for the first time ever in Eurozone history because they thought they really needed it. Swiss CPI, Consumer Price Index, declined at a negative rate of 0.3%, following last month's 0.0% level. We have UK PPI, Producer Price Index, rose at only 2.3% following, that represents the lowest level in years. We go to Canada. Canada, positive news. Unemployment rate declined to 7.2 from 7.3%. And in the Eurozone, in the U.S., unemployment stayed unchanged at 8.2%. Obviously, we know there's only 80,000 new jobs created last month, released last Friday, non-farm payroll numbers. So let's see if we can create some sort of fundamental theme to all this. I like to call them my Euro currencies. European currencies. And that includes Euro, Pound, Swiss. That article talks about the fact that we had negative numbers in all three situations. Negative inflation numbers in Switzerland, more quantitative easing needed in the UK, inflationary numbers all around not good. Then we have our commodity-based currencies. Now, we didn't have anything in New Zealand last week, so that doesn't matter. But we had Australia and Canada. Canada unemployment rate went down, which is good. And the Reserve Bank of Australia, they kept rates unchanged, but it was welcome. A lot of analysts actually said, listen, they kept rates unchanged this month, but they cut them the month previous. And if you look more into the numbers, by the way, I happen to know that the recent housing numbers in Australia were quite good. Things are good in the commodity-based currencies, Aussie, CAD, Kiwi. Things are really, really bad in the Eurozone, Euro, Pound, Swissy, not just the Eurozone, European currencies, to include all three. And then, of course, in the U.S. And Japan, we have other news. But you put the good against the bad to create a trend. Look at this. I mean, we spent a total of 60 seconds summarizing all the big events last week. And this helps us now look for a currency trade. Well, why don't I put a strong CAD against a weak euro? I wonder if the euro CAD is going down. Oh, we look at the daily chart and say, well, you know what? It looks like the charts agree with my fundamental analysis. Euro CAD has a huge move down. How about I put together the euro against the Aussie? Here's Euro Aussie. Daily chart zooming in. Is the Euro Aussie going down? Yeah, it's going down a lot. So there's no, really, it takes away all the guesswork. When I think of Euro Aussie these days, I forget what the chart looks like. I have no idea where the price is. I can't tell you that Euro Aussie's at 119 or 128 or 199. It doesn't really matter to me. What matters to me is I know that Eurozone unemployment hit new record highs of 11.1% last week. I know European Central Bank cut interest rates below 1% for the first time ever. I know yesterday Spanish bond yields went above 7%, and that is a very, very bad sign. You know, they're down today, 6.8%, but the trend in Spanish bond yields is definitely to the upside. Eurozone is worse today than it was in 2008. I would agree. The actual economic numbers, well, you can look at it through the charts. So our charts go back quite a few years. In some cases, we have unemployment in Spain, which is upwards of 25%, and the real unemployment level among, let's say, young employees is, close to 50%. That's not a good sign, So, look, we could go on and on with the fundamental news, but my point being is that try to follow the news, the big numbers. It's easy. 3 numbers: growth, which is GDP; inflation, which is, CPI; PCE, PPI. It's actually more than 3 numbers. And growth, inflation, and unemployment rates. So you have 30, 40, 50 numbers a month. So we're watching the charts all day. So to write down 2 numbers a day, it's not a big deal. I do it all day. Believe me. Trust me. It's very easy. Now, that's our technical approach to defining the trends, long-term trend lines. That's our fundamental approach, defining the trend. When we know the trend, there won't always be a trend. But if there is, the trend is your friend. Write that down 3 times. That cannot waver. I know the temptation. You look at the Euro Aussie and say, well, it's down so much. What if I bottom pick over here and if I bottom pick over there? You might bottom pick. You might be right. You could buy the Euro Aussie down here and it might go up 10,000 million pips. But we don't know that. What I do, the only thing we know is probabilities. If you had to make a bet, and the Euro Aussie, let's go a week into the future. What is the probability that the Euro Aussie is going to be lower than it is now or higher than it is now? It's not. I wouldn't say it's 50%. I would say 75% chance the Euro Aussie is going to be lower next week than it will be this week. Without looking at the economic news, actually that's a lie, because I looked at the economic calendar before, and I know Australia has unemployment numbers coming out, I think tomorrow. And or early tonight, later on tonight, I can't remember. And I know the economy in Australia is good, so I'm guessing that the Aussie is probably going to be strong. Why? Because I'm expecting a good number. Why am I expecting a good number? Because Australia has a strong economy, relatively speaking. All we know is probabilities. Wednesday, thank you. All we know is probabilities. And the probability is Euro-Aussie is probably going to be lower because I read a lot of fundamental news and because this chart tells me so. Let me go back to these questions before I get too far ahead of myself. Was a London session where you place your trade? Well, okay. Now, this is a trade that I missed. I missed the entry, but I'll be happy to share with you what I missed. We're taking a look at the Aussie dollar. Now, the Aussie dollar is not that easy because the trend is to the downside, but we had a huge move back up. But I happen to think that the Aussie dollar is still in a long-term trend to the downside. Even though the fundamentals in Australia have been good lately, we also have to consider the dynamic. You have Aussie, which is high interest rates, and the dollar, which is low interest rates. And when stock markets go down, which I think they will over time, that I think that the capital will move out of the Aussie into the dollar. So I know I just got done spending the last 20 minutes talking about how great the fundamentals in Australia are, but it's not that easy. I mean, there's other elements of the Forex market, such as the carry trade, which is a difference in interest rates between the two currencies. In other words, if I think there's just going to be a pessimistic tone on the global markets, if I think stock markets will go down, then I must think also that the higher yielding currencies go down. But the Aussie, it's not an easy short these days. But my fundamental opinion is that the Aussie is going to go down. The trades that I missed occurred basically when the Aussie dollar, this is a 1 hour chart. Please let me know if you don't see this. This is a 1 hour chart. Then the Aussie dollar hit its swing highs. Now, I didn't know that that was going to be the level it was going to stop. But we can use a simple indicator like the RSI, the Relative Strength Index. Ideally, we want to sell short when the RSI gets to near 70. And the RSI is just an example. You don't necessarily use this indicator. But step number one, just to recap. Step number one, define the trend. And we always want to trade in the same direction as the long-term trend. Number two, when the market moves counter trend on a shorter term time frame, look to enter a trade, which is exactly what I want to do. I woke up this morning hoping, or I went to sleep last night, hoping I'm able to sell short the Aussie dollar because the long-term trend, I believe, is to the downside. I'm not 100% convinced, though. I will say that. The Euro-Aussie, yes. Euro-CAD, yes. Euro-Aussie dollar, it's not so easy because the fundamentals are so good. Now, let's say on Wednesday, the employment numbers in Australia come out very, very bad and the Aussie dollar goes down 200 pips. I'm not going to sell short then because I would have missed that opportunity already. It's a little bit counterintuitive, but you want to look to sell short when the market's going up on a shorter term basis. Always trading in the same direction as a long-term trend. In other words, I'm going to use the news to allow me to enter and exit the markets. M-A-R-K-E-T. When the news pushes a market up and the long-term trend is to the downside, I'm going to use that as an opportunity to sell short, shorts. Now, number two, or number three actually, when the market moves pro-trend, then I will use the news. That's going to be the title of my new book. Use the news. It's a good title. Use the news to take profits. Why do we say use the news? Because, very simply, the market moves as a result of news. If there's no news, the market doesn't really move. That's why it's especially important that we pay attention to the markets during the active sessions. In the Aussie dollar, we had that swing high 4 candlesticks ago, and it's 9 a.m. Eastern right now. So at 5 a.m. Eastern, which is a little bit, towards the end of the active session of the London session, to answer your question, Harlan. What time frames do you drop down to in order to finesse an entry, which was another question that I failed to answer before. I always start with the daily charts. I always start with the daily charts. Once in a while, I'll use a weekly chart or a monthly chart, or at the minimum, I'll zoom out. I mean, it takes a little bit of experience just to develop a feel for the charts in the sense that, okay, let me zoom in. Is this enough information? No, that's not enough information. I have no idea what the trend is. Zoom out a little bit more. Well, I see the immediate trend is the upside, but this can be deceiving. So let's zoom out a little bit more. I really want to try to zoom out to really get a really good understanding of what the chart is. We can even go to start with a weekly chart, and we can see that the market's actually kind of neutral. But the weekly chart, it's a little bit too much. The daily chart is what I usually use. From the daily chart, I'll draw the resistance lines, support and resistance. We can draw the line this way, but then the market cross above it, so this line is no longer relevant. So we could draw the lines in this fashion, try to look for some sort of parallel situation, which isn't always so easy. You could say, well, that's, that kind of makes sense. There's no one right way to draw these lines, the technical analysis. So hopefully the fundamental analysis, it really should agree. And again, the Aussie dollar is not really a good example. Better yet, in fact, let's go to the euro dollar. Euro dollar is a really good example. Long-term trend to the downside. Now, from a daily chart, I will sometimes also look for a 4-hour chart. Here's a 4-hour chart of the euro dollar. And it's not just support and resistance. We can say former support might become new resistance, and we can also use Fibonacci. But as you can see, I mean, there's not a lot to it. Trend lines, Fibonacci, horizontal lines, it doesn't take very long at all to understand, okay, where is the market going to find support or resistance? And you can also use an oscillator. An oscillator is something that measures upward versus downward movements, like the RSI or the MACD or the Bollinger Bands. And we'll make this line skin here. Okay? Let's take away some of these lines to make it a little bit easier to read. Okay, so euro dollar, what do we know? Fundamentally, I think the euro dollar has a good chance to go down. Now, we can use an oscillator to help identify extreme market conditions. Enter and exit trades. To enter and exit trades. We want to sell short when the RSI crosses above and back below 70, or when the market touches the upper Bollinger Bands. We want to buy when the RSI crosses below and back above 30, and or when the market crosses below and back above the lower Bollinger Band. Don't have to use both. One oscillator is more than enough. Now, again, the trend, the fundamental analysis, and the daily chart technical analysis is going to tell me what the trade is. That will define the trade. The trade is defined by fundamental analysis and long-term daily charts technical analysis. That's going to tell me i.e. shorts euro dollar. That is we can't change that at all. To find the trade entry, we can use a shorter time frame charts, such as a 4-hour chart, and maybe even a 1-hour chart. I would definitely not go below 1 hour though. You start to look at 15-minute charts, you're looking at too little information that it's going to give you too many trade signals, I think. And or one oscillator. Oscillator, which I'm probably spelling wrong. Okay. Question, when you're an intraday trader and you're in a daily downtrend, but on a particular day it's counter trend, do you follow the overall trend or go with a counter trend just for that day, because sometimes you don't know the trend for that day till the end of the day? It's a great question. And I think Harley probably hitting on the same topic, which is you're waiting for a pullback to end and then get in. That's exactly right. Okay, we'll talk about the euro dollar. There's only one trade I'm looking for. Sell short euro dollar. Sell short euro dollar. My fundamental analysis tells me I can only sell short euro dollar, and the long-term daily chart technical analysis tells me I can only sell short euro dollar. My goal is to build up a really big position in euro dollar as the euro dollar goes down. On a shorter term basis, therefore, when the euro dollar hits a counter trend extreme, which means the market goes up for the day, which is what you're referring to, JD, when the daily trend, today's trading action, let's say the stock market goes up 200 points today and the euro dollar goes up 200 pips today. What am I going to do today? My goal today is to take a position to sell short the euro dollar, to actually add to my existing position. Then I look to enter the markets to sell shorts. There's no way I'm going to buy the euro dollar to speculate. I'm only looking to trade in the same direction. Now, when the euro dollar hits a pro-trend market extreme, means goes down a lot. And now how do we define a lot? RSI, Bollinger Bands, MACD. We're looking for some oscillator to tell us that that the market has hit an extreme. Think of the Forex market like a bunch of rubber bands. Most of the time the market's very close together and the rubber band is sort of not stretched out. But then big news occurs and the rubber band gets stretched in one direction or the other. If it gets stretched up, counter trend, I'm going to sell shorts. If it's stretched down, pro-trend, I'm going to take profits. Use whatever the market gives us. If the market gives us a counter-trend move on a short-term basis, like, for example, the euro dollar goes up, I'm going to look to sell shorts. If the market gives us a pro-trend stretched move, then I'm going to look to take profits. Can you show us euro dollar 1 hour chart, and how can we see it as a continuing downtrend? Well, the daily chart shows us, again, define the trend. As far as technical analysis is concerned, define the trend on the daily charts. I'll go to 1 hour chart, but define the trend on a daily chart. The daily chart tells us what the trade is. On a 1 hour chart, this is a 1 hour chart, and we can draw a resistance as follows, and maybe even a little bit more of an immediate downtrend. That's, by the way, you ever want to ask, you're ever not sure of the trend? Harley made a great point. Ask yourself the question, is the market making lower lows and lower highs? It's a downtrend. If it's making higher highs and higher lows, it's an uptrend. If it's making higher lows and lower highs, it's range bound. And by the way, if it's range bound, I'm not doing anything with it. I ignore it. It's not interesting. The stock that's not moving. How do you trade in the summer, July, and August with low volatility? That happens to be a great question. Now, we have earnings season, which occurs 4 times a year, January, April, July. In October, July tends to be a very active month. June tends to be very quiet, and August tends to be very, very quiet. Our system adjusts for that. Now, there's nothing conscious we have to do, but I'm looking for market extremes. If during an active month like July, the market tends to hit an extreme level 3 times a week, or no, let's say 2 or 3 times a day, I'm going to be very active. If we're trading in August and the market hits an extreme once a week, then I'm only placing a trade once a week. Corporate earnings season is approximately January, April, July, October. www.earningswhisper.com. I'll give everyone the link here. This is a great website to use. You go to earnings calendar and you go to the free earnings calendar. And by the way, earnings is defined, it's really official earnings season starts off with Alcoa, a steelmaker. They reported last night. Look for the big Dow Jones Industrial Average components. Those are the most important ones. That includes Disney and Alcoa and AT&T and I think Walmart's in there somewhere. The big ones, Ford, etc. Obviously, other companies like Apple and Google, Facebook. I don't know Facebook, but the big companies that move markets, look for the days that those companies report to be active days. That tends to be active. But our system is very simple because it self-adjusts for the market condition. If we're in an active month like July, IBM and Microsoft and Apple and Google all report earnings on the same day. The Dow Jones Industrial Average is up 200 points. And, we have 3 central bank meetings and the euro dollar is flying and the Aussie dollar is, dropping. Then we're going to probably be pretty active because the market is giving us opportunity to either enter or exit a trade. But conversely, if we're in the middle of August, Congress is on vacation. There's no new legislation. Thank goodness for that. There's no earnings. The stock market is up 3 points for the day. The euro dollar is unchanged for the day. What are we going to do? The answer is nothing. We're going to do nothing because the market's not giving us any market extremes. Use the news, but it's more than news. It's use the volatility. When the market gives us volatility, it's giving us very simply an opportunity to enter or exit a trade. If the market doesn't give us volatility, we're not doing anything. Now, again, my goal is to build up a core position. Now, the title of this webinar, which kind of took a long time to get to the point, is we want to build a core position and day trade around that core position. My core position is based on long-term daily chart technical analysis, long-term fundamental analysis, GDP, CPI, employment numbers, central banks. Is the Eurozone economy good or bad? Is it better or worse in Australia? Etc. Eurodollar, all my analysis tells me Eurodollar has a good chance to go down. But I can't sell short everything all at once. I want to start with a small position, and if that works, I'm going to add to it. And if the market goes down, I'm going to build to it. Now, I've been building a position in the Eurodollar for quite some time. So I'm on my other computer over here. I'm looking at just the prices, just to illustrate. And it's a very small position, so I have definitely not made millions. But just to illustrate where I'm looking to enter a position, my first sell short entry on the Eurodollar was at 131.97. 131.97. My second entry to sell shorts, and I've missed a lot as well. I've missed more opportunities. 127.62. 127.62. We had 126.69. 26.69. And that was my last Eurodollar entry. So as you can see, the Eurodollar is in a long-term trend to the downside. Whoops, I'll make sure you can see this chart. The horizontal lines represent my entries. The long-term trend is to the downside. But I'm going to look to sell short near market extremes. So we hit a market extreme here, went down. This bounce, I tried to sell short a little bit more. Then we went down, I took profits, bounced back up, sold short a little bit more. I haven't so far taken profits. But the next time the euro dollar hits a new extreme low, and we define extreme, again, with the RSI or, the Bollinger Bands, an oscillator of some sort, I'm going to use that opportunity to take profits. I'm going to day trade around my core position. Now, the actual mechanics of this, here's a euro yen because there's another example of what we've done here. To take a core position, I'll take 1 unit. Now, you have to decide on your own what is the proper, position size, taking into consideration the stop order and everything else, but we'll say it's 1 unit. Sell short 1 unit. When I take profits, I'm taking profits in half a unit, meaning, I'll make it easy. Sell short, trade entry equals 2 units. I say units because I don't know if a mini lot, micro lot, or a standard lot is appropriate for you. Take profits, 1 unit. Sell shorts, second entry, 2 new units. Take profits, second exit, take profits, 1 unit. So you can see over time, and we can move our protective stops. Okay, move protective stops to break even before adding to core position. Okay, sell short 2, cover 1, cover to take profits. Sell short 2 more, move stops to break even. Sell short 2 more. When the market goes down, close that trade, take half the trade off the table. Move stops to break even. And you can even trail your protective stops up. Here's the euro yen, just to give you an idea of the position I've been trying to build. Euro yen, my latest entry was 100 spot 67. 100 spot 67. That was my most recent entry. Sell short the euro yen. Before that, I sold short at 102.44. 102.44. Here. 105.99. Whoops. 105.99. Before that, 106. These are very small positions, but I've built it up over time. 106.31. 106.31. And before that, actually we don't want to include that because that trade was redundant. I'm not saying I do this perfectly. 107.07. 107.07. Okay. So you can see what we're trying to accomplish here. The euro yen goes down. I'm not going to sell as it's going down. Selling as it bounces. It bounced back. We took a position. Went down a lot more. Bounced back. Added to the position. Went down a lot more. Bounced back. Added to the position. I'm trying to build a core position as long as the fundamentals and the technicals continue to tell me euro yen's going down. Because at the end of the day, we're at 49 right now in euro yen. Who's to say the euro yen can't go to 95 or 90 or 85 or 0 or, wherever? We don't know. When the fundamentals start to change, when the news in the Eurozone starts to look better and better, then I'll consider taking profits. If the trend lines are broken and we start to go up, then I'll start to really close the trades. Or my stops will take me out of break even. How long do I want to stay in the trade? The answer is the more the better. I hope I'm in the euro yen, and I'll leave it with this. I hope I'm in the euro yen or any trade as long as I possibly can. Who knows how long it can last? Look at the euro yen in the year 2000. We were 8,800. The euro yen hit highs in 2008. 8 years later, 169 at 6,900 pips. So it's 80. We're talking about maybe 10,000 pips in 8 years. And by the way, the real benefit of a long-term carry trade to the upside, which is a great point, you read my mind, is that If you're buying the Euro Yen, Aussie, and Kiwi Yen, you're making interest along the way. If you're shorting the Euro Yen, well, there's a carry cost. Does a negative carry cost affect you? Well, if I'm short the Euro Yen and the Euro Yen, how much is a carry trade on the Euro Yen? I mean, interest rates in the Eurozone are less than 1%. Let's say it's on a mini lot, it's $1. That means I need the Euro Yen to go down 1 pip a day. I mean, to answer your question is no. The carry trade, I have not found it to be. And I've been short the Euro Yen for many, many months now. The carry trade doesn't affect me negatively. You know, if you're concerned about it, eating away your profits, and you look for the currency pairs with a small carry trade. Euro Yen, Euro Dollar. Stay away from shorting Euro Aussie. But there's really, even with the Euro Aussie, there's not really much. Even I know Wednesdays you have the triple carry, but that's to count for the rest of the week. And I guess some traders will close it before Wednesday so they don't have to take that cost. I don't. You know, we're trying to avoid a couple dollars in interest, and we're going to end up paying 3 pips in and 3 pips out in the spread. We can spend more money trying to get in and out of the trade. You know, my goal is to make, my first Euro Yen position, I'm in the money, 107.07. I'm in the money about 952 pips right now. Yeah, the carry trade does add up after a while, but I think the capital appreciation does a lot more for us than the carry trade hurts us. And I'm holding on to it. I mean, I don't wish for bad economics, but I know I'm running out of time here. And they're very, very small positions, so I don't mean to brag. I mean, it's not, we're not talking about millions of dollars here because I'm managing an entire portfolio. The Euro Yen represents one tiny little piece. And I have, been stopped out of some trades recently and I have my winners and losers, so it's not a perfect, system. But, the beauty is it's a low stress system. I'm not, looking every single day to place a trade. I'm just waiting for the market to give me something special. And it doesn't require a lot. And most of the time, I'm sitting there, where's my RSI, Relative Strength Index. Most of the time, I'm just watching the market and, I'm looking at the newspaper and reading articles and listening to Bloomberg radio and all that good stuff. Just trying to, track to see if there's any new developments. But most of the time, you basically find yourself there just sitting, studying, waiting. Just sit there and enjoy the process of watching the market. If you've carried your dollar shorting for a while, what did you do to pull back 2 weeks ago? Well, the method that we talk about here, it's theoretically what I try to do best between you and me, to be perfectly honest. I don't take profits as much as I preach. I basically just held my euro shorts the entire time. I happen to have an extremely negative bias on the euro currency for a number of different reasons. And for that reason, I don't want to lose. My concern is that I don't want to lose my position. That's my worst fear. I'm going to get stopped out of the euro, and then all of a sudden I'm going to wake up tomorrow, it's going to be down 500 pips. I have and your system, the beauty is over time you can see, you can kind of push it one way or the other to be a little more or less aggressive depending on your opinion. I have a very negative opinion on the U.S. economy, but the U.S. dollar I'm actually pretty bullish on, because it's a flight to safety. I'm moderately bullish on the Aussie. I'm somewhat bullish on the Kiwi, the CAD, probably in the middle. I'm very negative on the euro, and I think that the pound I'm negative on now, I think is going to get worse over time. I read a lot of news all day. So, because of that, I'm less likely to take profits on my euro dollar shorts. I'd rather hold on to it because I think things are going to get worse. But, I hope I'm wrong for the people's sake, but, nevertheless, if you read enough news, eventually you'll start to develop a little bit of a gut feeling. Should I really take profits in the euro dollar? And then you look at the economic calendar. What do we look for moving ahead? The next big number, by the way, I think is German inflation numbers, and Wednesday we have Aussie unemployment levels. So we look at the economic calendar to anticipate what is most likely to happen. probably bad news in the Eurozone, and maybe good news in Australia. Unfortunately, I'm out of time. I hope this has been helpful. If you have any questions, you can contact me directly, www.forexlounge.com. I do follow China. I do not trade the currency because it's just not readily available, but China does play a very, very important role. And there are some estimates expecting China GDP to come down to only 3%. If that occurs, that could be possibly very bad for a lot of us. Again, contact me if you have any questions. We want to thank you very much for joining us. Please see the FX Streets calendar because we have a lot more later on this month. Again, we thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon.